Welcome to the WRAL Daily Download. I'm Amanda Lamb. In today's deep dive conversation with WRAL reporter Matt Talhelm, we're going to talk about the real estate market forecast for 2023. Matt, welcome to the program. Thanks for being here.
Thank you.
So obviously, 2022 was a banner year. I mean, everybody, even if you weren't buying or selling a home, you know that housing prices went through the roof. And the outlook for 2023 looks a little bit different. Can you explain that?
Yeah, well, I actually bought a house in 2022, so I know firsthand how those prices went through the roof. A lot of realtors we talked to, called 2021 and early 2022 crazy. So what we're looking at right now, prices are still going up. They're just not going up as quickly as they were in 2020 and 2021 and through that early part of 2022. So the most recent data we actually have from Triangle MLS, which tracks all this, is from back in November. When you look at November of 2021, the median home sales price across the whole triangle was up 21% from the year before. But then when you look at the last year, November 2021 to November 2022, the median sales prices are up 8.4%. So you see, we're not talking about those double-digit kind
big difference.
Of gains in value. Yeah, and so a lot of the realtors, they called those glory years, I guess you could say, 2020, 2021. They said it was wild. They called it an anomaly. And now we're sort of getting back to that pre-pandemic normal market.
So kind of a normalization, a stabilization, if you will, of the market. And, when I hear the numbers you're telling me on the surface, it sounds like, wow, this is great for buyers because a lot of people were being priced out. But that's not the case because the cost of getting a home loan has dramatically increased. Mortgage interest rates have doubled. So walk us through what's happening on that front.
Yeah, our WRAL TechWire team called it a tug of war between those higher prices of homes and the higher cost to borrow money to buy a home. So I actually got some help from the mortgage lender that I used to get my house, Sherry Riano's team at First Heritage Mortgage in Cary. And they'd helped us with some of the math here. So let's say you take out a $350,000 mortgage. A year ago, the interest rate was right around 3.25%. Your monthly payment was about $1,500. Today, with that doubled mortgage rate at 6.625%, you're looking at about $2,241 a month. So that's a $718 difference each and every month. And as Sherry Riano said to us, that's a big financial drain on
huge.
A family.
Exactly.
And, that's $718 a month. Most families don't just have that extra cash laying around to pay for that. So it adds up. And one of the things I really found interesting as we were doing this story, when you look at the life of a loan, a 30-year loan at that $350,000, you end up paying $258,000 more in interest payments over those 30 years on that home than you would have last year. So that's a big difference, and it really adds up.
Yeah, and when you break it down into that $718 a month, that's something where somebody might say, I just can't afford to do this right now. We're just going to have to stay put. So, and it's not just that the rates are going up, it's also harder to qualify. So obviously, all of us who've bought a home know that to qualify for a loan or a mortgage, you have to show them your income, right? So how have those requirements changed to a point where it's pricing some people out?
Yeah, it's gotten a lot tougher to qualify for a mortgage going back to 2008 because of the housing crisis when lenders were handing out mortgages left and right, and that helped lead to the collapse in the economy there. But now it does take a lot to qualify, and it is getting tougher because they need to make sure you can actually pay that 6.625% in interest rate there. So looking at $450,000 home at 3%, that required an income of $78,000 a year. But at the new interest rate, you're looking at you need to make about $114,000 a year in income to qualify for that. And Sherry Riano told us it's making a big difference in who qualifies, who's even interested, because most people they realize their finances are not strong enough to pay that kind of thing. And so what they're seeing in the mortgage industry as well as from realtors is a lot of buyers are kind of just like sitting on the edge at this point, waiting to see what happens. There are some forecasts looking ahead to the next year into 2023, later into 2023, that we may see those mortgage rates fall back maybe in that 5.5% interest rate. So that would help bring some more of those buyers back into the market. that wouldn't need to have that high income level to qualify.
So big picture, and again, we're looking in the triangle, but we're also looking nationwide. Overall, do we expect in 2023 to see less houses on the market and also less opportunities for that multiple bidding that we saw in 2022?
The multiple bidding is not happening as much as it was. It's not as competitive, according to most of the realtors we talk to. And that's actually some good news for first-time home buyers or people who don't have those higher incomes or a lot of cash sitting around. They're not having to compete with as many people. They're also not having to compete as much with those investors that were flush with cash and buying up homes in the area. Some of those iBuyers, as we call them, that are the online buyers, some of them have completely left the market from what we've been told by a lot of realtors. So what we're looking at in the market as we move forward into 2023, we are seeing that there is a little bit of an improvement in the supply coming on. There are homes under construction, especially in some of the outer communities of the Triangle. You're talking about Harnett County, Johnston County, those areas that have the land. There is building happening there. So we will see more homes coming on the market, according to most of the realtors we talk to. But what we've seen over the last 60 days or so is a bit of a calming, which is giving people time to look at the market, see what's going on. It's also giving time for inventory to come on and sort of sit there a little bit longer.
So a little reset, if you will.
Yeah, it's a little bit of a reset. And one of the realtors we talked to who's been doing this 21 years in the Triangle, he told us that we've seen every kind of market over the last 12 months, from the crazy wild at the beginning of 2022 to this calming now. And we aren't seeing the multiple offers. We aren't seeing those soaring prices like we saw. So we may have a little bit of a reset as we shift back towards that normal pre-pandemic market.
Well, thanks, Matt. We will be back after the break with more from Matt Talhelm on how all of this is going to impact us here in North Carolina and specifically in the Triangle. Welcome back to the WRAL Daily Download. I'm talking with reporter Matt Talhelm about real estate in 2023. Now, Matt, we've established that nationwide the outlook is very different. The prices aren't going up as quickly. Mortgage rates obviously are going up, and that's been difficult. So do we have a different impact here in the Triangle than the rest of the country? I mean, how are we faring?
As they say in real estate, it's local, location, location. So what we're seeing nationally doesn't necessarily apply here in the Triangle. So one of the realtors we talked to said, don't even look at those national numbers or the national forecasts, because we still have strong job growth here. There are still companies, big companies, moving here. And that gives this area a little bit of a buffer, a cushion from any kind of shift in the economy. So one of the big things they say that if you look at your finances and you are looking to buy a home right now, the increase in the prices, it's not as fast, it's not as high as it was before, and it's actually helping offset the increase in interest rates for some folks. So you may actually be able to get a little bit more of a house today than you could have if those prices kept going up as quickly as they were a year ago.
You might have some more wiggle room,
yeah.
Right? And so many people moving into Wake County. I mean, it's just astonishing the growth that's happening, especially in downtown Raleigh. So do you think some people are just going to say, you know what, we're going to just not put our home on the market because it's not the best time to sell, and we're just going to be patient and see what happens?
Yeah, from the realtors we talked to, that's what they've been seeing here for the past 6 months or so, going back to middle part of 2022, is that people were saying, I know I'm not going to get the high prices that people were getting and when they were selling homes a year ago, so I'm just going to wait it out. And that's contributed to the shortage of inventory on the market, because if people aren't moving out of their homes and people are still moving into the Triangle, there's not enough homes for people to buy. So, and you think about it, if you sell your house today to buy another house, you're going to pay more because your interest rate is higher, and you're going to pay more because the next house you move into is going to just cost more because the prices are
and
still
you already
going up.
have to know where you're going, because if your house sells quickly, then you're in trouble if you don't have some place to go. Yeah.
And rents are high too, so we know that that's even a problem for people.
I've heard so many people say, gosh, I wish I'd sold my house last year, and now they're like, okay, we're just going to stay put. So I think one of the interesting things too is that, buyers are being pickier because they're like, wow, these mortgage rates are really high. And I'm just not going to jump yet.
Right. It's costing you more. So when your family's money is on the line, you want to make sure you have the right decision. There's less competition buyers have more time. You don't have to make a decision when you walk in a house and say, I'm putting in an offer and I want this house. My own personal experience, we bought a house sight unseen because we wanted that house and it was the right price.
And there were other bidders,
and
I'm
there
sure.
were many other bidders offering full cash, something that I couldn't do. And so we saw that there was so much competition then. We had to make a decision right away. And a lot of people were in that boat this last year and a half.
And that's a lot of pressure. That's a lot of pressure.
It is. And now with the less competition, buyers can be a bit more pickier. They don't have to risk losing a home to another buyer right away. And some of the realtors I talked to also said that on the other side of that, sellers need to prepare themselves too. Your homes can't just be put on the market and someone will buy it without any fixes.
As is. You have to now maybe get it a little bit more presentable,
and
if you will.
Expect the buyers to demand some repairs too, which is something that I know we had no leeway with doing.
Right. So when we talk in a year from now, do you think we'll look back on 2023 and see something pretty different than we saw in this area?
We're still, from everyone we talk to, all the realtors, the mortgage lenders, we're still going to see a strong housing market here. That's something that this area has been lucky and fortunate with even before all the craziness. What we're not going to see are those soaring values. Your home is not going to go up 21% in value in a year. And we already see that in those numbers starting to taper back to 8%. Expect more of that as we head into the next rest of this year.
Well, Matt, thank you so much for sharing your reporting and your insight on this topic. And thank you for listening to the WRAL Daily Download. You can get more in-depth coverage of the Triangle real estate market by listening to WRAL's new podcast, Real Estate Rush, North Carolina, hosted by WRAL anchor Chris Lovingood. Recent episodes cover luxury living, higher rental prices, and foreclosures. You can find Real Estate Rush, North Carolina, wherever you get your podcasts.